Hello everybody, welcome to the TraderMerlin show. It is your Wednesday edition, hump day. We've got an exciting session out there today. As I'm trying to do, I'm listening to a lot of your listener requests, and one of those requests has been to get Corey Lane on the program, and I thought, you know what? I've worked with Corey Lane in the past. Corey Lane will gladly come on the show, and lo and behold, we've got Corey Lane today. So he's going to be coming up with us right after I do my morning intro or top markets. Big shout out to everybody joining us today again. There's a ton of people here, and I got some new ones. Chef E, you might be a new one. I haven't seen you out there before, so welcome, Chef E. Hello, Terry, Natalia, Big Ab, Gino. Good to have you all, and Sean as well, and many, many others. So, big topic right now is going to be what happened in the after-hour session. As you guys know, I was showing you this one, the popcorn trade of the day, which outlined a couple companies that are usually so freaking crazy in the after-hour session that you have to step back and go, oh my God, what in the hell is going on? That's what happened last night. So I'm actually going to start with three companies that reported earnings after hours, which is why you're seeing a huge move up in the futures markets in the after hour, particularly in the NASDAQ. Why? Oh, well, let's check out the chart. I'm going to start things off with Facebook. Here's Facebook having missed earnings. That's right, folks. Facebook missed earnings. How do I know? Well, we can bring up the earnings page here, and you'll see that they missed it by a penny. They were supposed to come out at $1.72. They came out at $1.71. And boy, I tell you what, I'd love to miss earnings by a penny and still jump 17%. Gotta love those types of moves. So big move up for Facebook. This obviously is one of the top three companies on the NASDAQ 100, which is why you're seeing the NASDAQ up 4.57% as we speak. But that wasn't the only one. Good old Tesla. Tesla and the wonderful CEO of Elon Musk, who's been extremely boisterous lately. It's up $71 in the after-hour session, also showing about a 14% gain off of earnings announcements. You also had Microsoft, which didn't have as big of a pop. The reason I bring up Microsoft is, remember, Microsoft is the number one weighted one in the NASDAQ 100. Surprisingly, Apple is no longer the top seed. It's Microsoft. They closed the day right around 177 and currently $7 higher at 187. So you have three of the monster weighted stocks on the NASDAQ 100 all blowing out price-wise to the upside here. Microsoft giving some back, but that's again why we're seeing such big numbers and moves to the upside. So I'm going to start with our worst, which was a positive number. Yay, hallelujah for all you bulls out there. It's hard not to be bullish with this market, I tell you. It's just incredibly strong right now. Here is your gold chart, still above 1700, 1729. Technically, no big deal. You see, it's really just kind of making consolidation formation where you're really making lower highs and higher lows. So more of a pennant formation, if some people will call that one. That's what it's forming. Not really that big of a deal. 1730 is where gold closed at. That's a gain of over half or 1/2%. Dow Jones, no big deal. I do want to talk about, let's go to the S&P. I'll go to the S&P 500, which right now is up 3.18%. A lot of that happening in the after-hour session, and I'll show you that here on a 5-minute basis. What's, again, noteworthy is the breakout that happened yesterday, although it didn't close above it today. We got that follow-through breakout on the S&P. That may actually be a topic of today with Corey talking about some breakouts a little bit later on. But there you go. This is, since the rollover, you've seen just a real nice pop on the S&P 500 to the upside, and that will probably translate over to a nice gap up in the morning. The 10-year note, you saw yields rise a little bit to 0.62, but I'm not going to spend any time there. The real big winner for the equity indexes was the Russell 2000. We talked about that being a breakout trade a couple days ago as it kind of broke through those highs from the 13th of April. The follow-through has been phenomenal, especially the last 2 days. Just great move up on the Russell. Right now, you are sitting on the Russell futures at 1368. That's a gain of 5.1% on the day. And you're thinking, well, we've got to be getting, that's got to be the top dog, right? 5% is pretty damn good. No, not even close. Bitcoin having a huge move up today. I mean, that is a candle you don't want to see on your birthday cake because it means you're damn old. That is a giant candle out there. Up 16% on Bitcoin today. Moved over 1,200 points in the last 24 hours. You're at 9,025 on Bitcoin futures right now, making it what should be the number one. But no, it's not number one. Why? Because crude oil going nuts again. Now, this is the part that's going to drive me crazy, and I'll maybe explain it a little bit later on. I was long 7,000 shares of UCO, which is a double long oil ETF. So when I woke up and saw that oil was up 30% this morning, I thought, hell yeah, I'm going to have one heck of a day. I look at my UCO, I was only up 6%. Riddle me that. How does a double long oil ETF move 6% up when the commodity itself that it's based off of moved 30? Doesn't make any sense. Anyway, here is your chart for crude oil, 24.39% right now, trading at 15.35. It did hit an intraday high, which was substantially higher than that. You were looking at a high of about 16.78, and that, my friends, will do it for your top 7 markets out there. Now, next guest I've got on the program, he's got a pretty interesting background. We'll maybe talk a little bit about that when we talk about his profile. Tons of experience trading, really with an emphasis on options. We're going to have Corey Lane joining us today. Corey, how are you doing?
My man, what is up? How are you?
I'm great. I'm living the dream over here and happy to have you with us finally on the show.
Dude, I love being here. Thank you. I don't know whose idea this was, but it should have been done a long time ago.
It should have been. It absolutely, and I think we'll do it much more frequently now that I have a little bit of autonomy in my world over here. Let's start things off with the trader profile because I think this might be appropriate. The viewer is sitting at home looking at your screen going, well, hold on a second. He's got drums behind him and he's got he looks like a very active guy. I want to know a couple of things, and I'm going to, actually 3 things, and I'll post this on our website or on my YouTube page after this. What I want to know is 3 things. Number 1, how long have you been trading and involved in the financial markets? Number 2, what instrument do you like to trade? And number 3, what would you say your specific trading strategy is?
So I've been trading now for going on 15 years. For the prior 15 years, I was a professional musician, hence a lot of the equipment I have, and still do write a lot of music for television and film. But I've been trading now for 15 years, which has become more of a primary thing for me, music being secondary on the financial side of things. Primarily focusing on options. That's where I started 15 years ago. It was only about 6 years ago that I started trading futures, so primarily those 2 asset classes. And combine those 2, as some of you guys may know more recently, as I've been focusing on a lot more on options on futures, which has been great as well. And primarily because of those 2 vehicles, mainly options being one of my primary ones, I focus more on swing style trading. So I'll do both reversal trades, which a lot are familiar with, pullbacks, and breakout trades, which have been really great in the most recent momentum, both up recently, but also down over the past couple of months as well, because the market wasn't really pulling back, giving us an opportunity to enter. Breakout trades became a really prominent source for me.
Nice. A quick and easy profile, guys. He's been doing this for 15 years with options, 6 years with futures, basically trading options and futures, and really loves to do momentum, and I would say probably swing trading style. So there we go. You mentioned a couple things I think might be noteworthy, and that is going to be the breakout trades. Right now, we've had this market, which we can make the argument that the bottom is in. I don't think so. Others think it's in. Doesn't matter. We have to trade what we see in front of us. But it's in a moment right now where we're seeing a lot of things form bottoms and start to have potentially trend reversal type formations, which leads to breakouts. And you mentioned breakouts are something that you're looking for. Maybe share with our viewers a little bit about what you're looking for with breakouts, maybe what are some of the criteria and how you trade those.
Yeah, so one of the big things on breakouts that I will always want to make sure that I see is, and don't mistake that for, I like pullback style trading, it's just we don't always get the opportunity to get the pullback. But specifically when it comes to breakouts, I need to see a couple things in place before I even consider it. Number 1, Merlin, you and I know that you can trade off of areas of resistance or support or supply or demand. And if a level has not been touched before, if we've got a market that collapsed, as we did a few months back, and prices go back up to that same level for the first time, odds are it's going to reverse and go lower, right?
Yep.
However, if we've been up there 1, 2, 3 times, odds are we're going to break through. And so a couple things that I need is I need an area where prices once broke down for a break to the upside, so broke down. I need that area to be touched 2 to 3 times. And here's the big one. I need basing to occur, right? I need that sideways price action to occur at the area, same area we've been touching, for prices to break higher. The problem with most breakout traders, or they break out and they get an immediate failure, is they don't get that basing before the level or right at the level. And that basing allows the energy to be built. And it allows the buyers to get their orders in and the sellers to get their orders filled. And when prices are flat and equilibrium is in place, typically, if we're sitting at an area of old supply or resistance, prices will break right through. So I need that basing after multiple touches. Second thing we need is we need room to roam. We need room to roam higher. If this thing's going to break out, how much further can it go? If we're sitting next to an area of resistance or support or demand down below on the breakdown, then there's no real room for it to run. And those are the two biggest things that we need when building breakout style trades.
All right, two simple things that he needs out there. Number one was basing, and two, room for run. You know, it's interesting that you bring this up because I'm a pattern trader as well, and you could say that a breakout trade is essentially, you know, you're looking at a pattern formation here. It's basically the characteristics of price action of the buyers and sellers, accumulating, in this case, if it's going to be breaking to the upside, watching it slowly build, understanding the dynamics of that, and when it finally does pop, going long to the upside. What sort of things would you... I guess what sort of things are you doing with options there? Are you purely buying directional? You know, there's a question that came in here real quick from Jamie Lee. It says, do you sell puts to enter a trade below a demand zone and then sell covered calls once acquired? I mean, how are you trading those?
So there's a couple different ways. It depends, and every single one of the trades that I'm in well, I wouldn't say every one, but primarily the trades that I'm in right now that are breakout trades are option trades. Because we've seen a number of stocks start to build, as you talked about earlier, start to build this momentum and put in reversal patterns. And so a majority of the positions that I'm in are option positions. You could just go long the stock above the area. And I could share my screen at any time and show some examples. But with option trades, any good option trader knows, and if you haven't learned them yet, it's a great asset class for this, that knows that volatility determines which strategy you apply.
Right.
So right now, volatility has not dropped. It's dropped since since late March, but it hasn't dropped all the way down to the lower, end of its 1 year range. We use implied volatility to determine that. And so we have to use a lot of spread trades today. And because I'm directionally biased, I expect prices to rally higher in a breakout, or I expect prices to drop in a breakdown. Then I'm going to use a directional, either bullish call spread, so it's a vertical spread, buy a call at the money, sell one at my target, at or near my target. Or if I'm directionally biased to the downside, I'll buy an at the money put and sell one at or near my breakdown target. And keep it simple. Vertical spreads, 80 to 90 days out, somewhere in that range, 25 net delta. And that minimizes the risk of volatility in time, but allows you to capture the directional move I'm looking for.
Nice. Chris, let's see. Chris's comment here says, Corey, is this strategy being taught at Traders Army? Having not even been involved with that, I can tell you this. I know Corey well enough to say that, yes, it's taught at Traders Army. It's also one of... Corey's the type of guy who's going to teach you, look, there's all kinds of different weapons out there, which is why you saw in the description for the show, I said options are, without a question, without a doubt, the Swiss Army knife of financial markets. You cannot trade options and be good at it if you're just saying, I'm only going to be buying. There's buying, there's selling, it's all kinds of strategies. So most importantly would be to use the right strategy at the right time. And I think that's the challenge that many are presented with. Would you agree?
I would absolutely agree, but it's not difficult.
Right.
You can see, when I teach people how to trade options, we spend, a couple of good hours at Traders Army just focusing on volatility, how to read it. What does it mean? Where does it come from? And how do you protect yourself from adverse moves in option pricing? It's simple, but it's one thing that's very underappreciated when someone's learning to trade options. And it'll kill an account if you don't understand it.
Yeah, it's funny. I've actually had comments over the years where someone's like, okay, I bought put options and the stock did exactly what I thought it was going to do and I ended up losing money. How's that possible? It's like, you got to understand implied volatility, and there's different characteristics there that you need to pay attention to. It's not as simple as just, it's going to go down. There's variables. There's math behind the scenes. Now, are you a math guy? Should people who don't understand math be fearful of options?
No. In fact, I say this with every bit of sincerity and truth. I cheated my way entirely through high school, never went to college. I couldn't give two blanks.
You can swear on this show. It's okay.
Oh, I can? Yeah, I couldn't give two shits about what was happening in school because I was looking to play rock and roll. So no, I am not a math guy. In fact, my two boys, my sons, we homeschool them, and they're getting into like algebra and crap like that. And they're like, Dad, can you help me? And I'm like, no, I can't. I got to relearn it. Give me a Khan Academy video or give me something because I don't know that. So no, it's not hard math. It's not really math at all. There's a little addition, subtraction, but nothing more than that.
Corey still thinks the Pythagorean theorem is a heavy metal rock band from Sweden, but totally different story right there. Let's see. There's a good question that came. Where was the one about filtering? Mike LaRusso says, how do you filter, or do you have a filter to find these trading ideas? And I'll set the stage here a little bit. I did a show maybe last week where I did kind of scanning to find opportunities. And I did that predominantly through equity markets where I was looking for certain criteria. Do you have a scan that you use or specific filters?
I don't. I mean, I do have some scans if I'm really short on ideas and positions. I do have some scans. I use, depending upon what I'm looking for, I can scan for volatility. So we can scan for high or low volatility if we want to be a credit spread, seller, or if we want to be a debit buyer. I find that that's okay. But one thing that I think primarily everybody needs to understand is every good option trade starts with a good stock trade. So I rarely go out and just scan for option trades. I'll scan my watch lists for good stock setups or good, futures market setups. And if the risk reward is there, but I don't want to spend the money on the stock, that's when we go to the option position and try to build it from there. So I have a watch list that is pre-built in my Thinkorswim. Primarily, it comes from the penny increment options watch list, which is built into Thinkorswim. And then I've modified it to take out some stocks I know I'm never going to touch. Like I don't touch pharmaceutical drug companies. I don't touch the penny stocks, anything that's got wide spreads. But that list is about 200 stocks long, and I'll literally go through each one of those stocks just with my eyes. And I call it speed dating, where I'll go through and I'll look at the chart on a daily chart, and I'll speed through 200 stocks in 10 minutes. Because my eyes are so trained to know what I'm kind of looking for. I won't do all the risk reward analysis at that moment, but I'll get a healthy little list of about 10 maybe bullish or 10 maybe bearish looking positions, and then I'll go in and really start to build positions around those, and maybe come up with 3 to 5 for the week that are high probability. I use my eyes to scan mostly.
Nice. Let me just real quickly show you guys what he's talking about. This is kind of a scanner that I built for you we did the session a couple weeks ago or a week ago. This is really what he's talking about. I have a pre-built, and this is in TradeStation, but you can do it on almost every platform. Some are predefined, and I do the same thing. This list here is probably about 300, and I can go through 300 stocks in probably about 10 minutes, and that's doing a pretty good analysis. Something like this today, if you're looking for a breakout trade, you had Applied Materials, had a nice breakout trade today. Is it something I'm looking at right now? No. None of these really jump off the page at me. But what I'll do is if I'm going through here and I find opportunities that I like, I simply have a little piece of paper and I'll write them down. Like right now, PayPal's coming right into an overhead supply level, and I'm thinking, hey, this could be a potential opportunity. But I can go through these very, very quickly without spending too much time. And what I like best about this is it doesn't give me a long time to formulate the wrong decision or to listen to somebody's opinions about it, and all of a sudden it comes out wrong. It's basically I'm just going to sit there, flip through them real quick, know what I know about technical analysis, and say, does that picture give me an opportunity? As I say that, take a peek at AIG, Corey. Is this something that would pique your interest? Because AIG's got a bunch of volume in it. You can see that it's really forming what many people would call, this is really kind of an ascending triangle, if you will, because it's making higher lows, and those highs are staying right about the same. And I'll even annotate this for the viewers out at home, because Corey and I did not prep with this, but I mean, you talk about a breakout potential. Take a peek at this AIG chart. I mean, it really looks like it's building strength to the upside. Is this something that would kind of make your radar?
It would. The pattern alone of that ascending triangle is what catches my eye. And the fact that we've been at this same price level twice before, it's an area where we broke down from back on March 13th. We broke down from that area. So it's that area that was an origination of the move down that's now been retested a couple times. Now, the key to this is I need room to roam. So where do I see price going with this momentum building? Is I could see an easy money price target around 34.40, somewhere around there, which comes, or 34.35, which really comes from the breakdown on March 10th. Now, something I'm not getting right now that I need to see is I need to see some basing in this level before the breakout. Why? A, we need energy to be building. And energy right now is not building in this area. It's being built from the origin of the most recent move down at 23 bucks. So if we buy above 27.65 thinking, oh, here we go, it's breaking out, where do you put your stop? You got to put your stop all the way down below the pivot at 21.82. It's far away, and it only gives you a 1-to-1 reward to risk. And basically what that means is you're buying after a rally in price.
Yep.
All the way halfway through the move. I don't like that. So if we get basing in this area between, anywhere between 26.85, which is below where we are now, and 27.70, we get basing in that area, then we get a breakout. Then we can keep that stop tucked nice and tight underneath that base, and that gives us room to roam with very low risk.
Right.
Another issue that I see is we've got earnings coming up on 5/1 or 5/4, so I wouldn't hold through that, but we could make it there before 5/4.
Yeah, absolutely. All right, Natalia says she'd gladly tutor your kids in algebra if you show her how to trade options. So we're getting requests for people to share your screen. Is there something you want to draw for? You want to do some art, teach us art school, or show us what you're looking at on a daily basis?
Art school.
Well, you're an artist. I mean, come on, we'll give you that one.
Well, I'm a musician. How about that?
There you go. I like it. All right. Well,
I'm an artist, right? An artist known as a musician.
There you go.
Yeah, so I just have your AIG here, but a similar situation. There's several really great setups. Ones that we had taken this week because we hold a lot of live trading rooms throughout the week, 1 to 2 hour trading rooms, and we'll set up futures positions and options positions over at Traders Army and monitor them and trade them throughout the week. And one that's been just crushing it this week, it's odd, but it's the retail ETF, right? It's XRT. And I first started looking at this going, it's retail. What in the world is going on in the world of retail when we've got quarantine issues going on? Are people still shopping? What kind of stocks are in this retail ETF? And it's stocks like Costco, Dollar General, Rite Aid. I believe Walgreens might be in there. So it's the type of companies that people are still, in fact, doing a lot of online shopping at. Volatility has collapsed dramatically down to not the lows of the year, but very low. And again, you'll see this setup where we can go down to a smaller time frame, but touch once, touch twice, touch a third time, and then we were looking at this on a little bit of a smaller time frame, and we got a little bit of basing here just before the breakout. Now, our target is about 2 to 1 away, and I don't know about you, but my plan says I'll take a 2 to 1 reward to risk all day long in a directional trade. I like a 3 to 1, I like a 10 to 1. But 2 to 1s are about as minimal as I'll go, and this gives me that 2 to 1. But because we had all the basing here, tuck the stop up underneath 32.33, and I started to notice some really weird, not weird, but I'm not quite sure why home builders are breaking out the way they're breaking out. Can you explain that one to me? Why in the hell are home builders so on a tear right now when my wife does real estate, and I know that not a lot's moving there. So what's the story here? I don't know.
I know why. I can tell you why.
Why?
It's basically everybody going, I'm buying everything I can right now because the market sold off 30+%. It's basically buy whatever it is without doing the thought process. And that's my opinion. I think the housing market is not that robust. So we were going to have a housing show maybe in the next week, but yeah, I think it's really the people's unbridled enthusiasm for the overall market, and they're buying anything, and it's the rising tide floats all boats. Yeah.
So XHB, this one is not a good breakout because we didn't get those 3 touches, but it is a great little pullback opportunity. Win another one of those, it's like, why? Right? But again, same setup as your AIG. Touch once, touch twice, a little bit of basing at the level, starts to break out. So I'm liking these breakout trades, and gold was kind of the same way because gold was barely pulling back for the last 2 years. I mean, I pulled back a couple times, but it's like if you wanted to participate in gold in any way, I felt like breakout trading was the only way to do it. You know what I mean?
Yep. I'm bringing up the charts over here. It's funny. You've got the white charts. I've been using black charts. It's just easier on I spent years using white charts, and I feel like it fried my eyeballs. So I'm going back to black charts now.
Yeah, and I was on black charts for the longest time, but then I started presenting in front of the room, and then black charts on a projector looked like crap. Yeah. But now the white has started to I've become more accustomed to the white because I was using TradeStation for a little while, and they're all white, and I like that. And I'm like, this looks good. Yep. One that triggered today was NetApp, which is, again, it looks a lot like AIG, but earnings are not until the 3rd week of May, so plenty of time, plenty of room to run. Sticking primarily to the daily charts, but we don't have any weekly supply until we get up to around 52.70. So this one's producing about a 3 or 4 to 1 if you can get up as high as 58. So Again, a lot of stocks are setting up to break out.
Yep. And
you look at room to roam, not just on the stock, but you look at room to roam on the equity market as well, meaning the S&P, how far does the equity, how far does the whole market have a chance to run higher? So concerned with that. NASDAQ doesn't have any near-term supply, and Russell's on a tear. And I know with every bone in my body, the market should be reversing at these levels and going 40% lower.
Yeah.
Because historically speaking, that's what they did in 2009. All the way back to 2000, all the way back to 1929. You get a 50 to 60% retracement from that big price shock, and prices should be going lower. But I feel like there's so much in the charts telling me you got to be bullish, dude.
Yeah.
Can't be all bearish because you're going to get your ass handed to you.
Sure, especially the last couple of weeks. I mean, these last few weeks have been savagely brutal. I'll bring up, I'm sharing my screen here just to show the ES. Let's go back to a different watch list over here. If I share with you guys that ES, let's go figure out how much this thing has bounced from those lows that we saw back in mid-March to where we are right now on a close. You're looking at a 35% rally. I mean, that is a hell of a move. And, I've been caught a few times on shorts. I actually lost money today short in the ES. Luckily, I made it on my crude oil trade. But yeah, it's a tricky situation that we find ourselves in. And let me ask you this one, Corey. I know that you mentioned a couple times earnings, and earnings obviously coming in right now. A lot of companies are not doing so hot. Of course, you had Google today blow out. I mean, huge move up. Facebook, Microsoft, Tesla. They're not exactly beating earnings, but they're holding well, especially the internet companies.
Right.
Just two things. Number one is you mentioned that you really don't want to be holding any of these through earnings. As an options player, do you ever do that where you're selling, trying to collect some overly inflated premium, or is that just off the table for you?
That's off the table for me.
Cool.
I've done it a few times, and luckily, it's worked out for me. But I've also had students of mine who've done the same thing. They'll go out. I remember an example it was Chipotle, and they were coming up on earnings, and the expected move was like $35. So it was about a 10% expected move when you look at implied volatility. They sold options 50 points out of the money, 50 strike calls out of the money, 50 strike puts out of the money. So they were well within the expected move relative to implied volatility. And wouldn't you know it, Chipotle jumped $97 lower, causing their 50 strike out of the money, 50 points out of the money, to be 45 points in the money.
Yeah.
And they were naked. They were just selling naked puts. And I'm like, and that's, I mean, on 100 shares, that's $4,000 a contract. And I'm like, and there's the risk of holding through earnings.
Yeah.
Right. And so you could buffer that risk with a spread trade. I suppose you could, sell a put and buy a put and basically create an iron condor out of it. But I don't generally find that, yeah, you may have this string of, 4, 5, 8, 6, 7 winners, whatever it happens to be, but the one or two that just blow out way bigger than you expected and they wipe out 7 to 8 of your last winners, it's just not worth it. It's too much anxiety for me.
Yeah.
I would rather pre-plan in the right volatility environment, take stocks like what are some good ones, like Netflix and Snapchat and Twitter and Skechers, and stocks that actually move 18, 20% on earnings and gap. I'd rather pre-plan a month out and go long strangle on those, where you're expecting a big move because historically they do. But right now, the volatility environment doesn't support it because we're not in that lower 20% of the volatility range to be really buying options. So,
right.
Yep.
Cool. I like it. Let's see.
What about you? Do you sell options into earnings?
No. But I'm also not as good with options as you are. I am a neophyte. I'm predominantly directional. I'm an option seller if I want to own something. So if I'm looking like United. I was looking at United Airlines a month back and saying, I'm a buyer at 25. So I sold some puts, and I was, they were paid me $4 for 30 days.
Yeah.
So
it's great.
I was like, all right, I'll take a 20% rate of return on my investment to hold it for 30 days. Luckily, I didn't get executed. If I did, I'd have been fine because I would have bought it at $21. I'm okay with that. So, but I'm primitive. I'm not I spend too much time analyzing these markets to really dive into options. Maybe one day I'll get taught by you.
Dude, what do you mean one day?
Well, we're on the stream right now, and Corey's going to teach me options for the rest of the day.
That's right.
Let's see. Kevin and Natalia both asked this one, so I'll see if I can get it through. They said, how much basing in which time frame is enough to build energy that you're looking for? Do you have some kind of benchmark or baseline metrics for that?
Yeah, such a good question. So because I'm primarily swing trading stocks, I stick to weekly charts to define my overall, trend or directional bias. I use the daily chart to start defining the actual zone itself. And then I'll go down to an hourly chart, but that's as low as I would go to really refine, are we getting enough basing at that area of resistance or that basing at that area of support. I won't go any lower. A lot of times you can see the basing occurring on a daily time frame, but I'll go down as small as an hourly time frame to look for that basing. And I don't need that many bars. Like for a lot of what's been happening lately, you'll get like two daily bars of basing and then pop right out. So on an hourly chart, that may look like 10 to 12 bars, but I don't need that many bars. I need a pause, just enough of a pause to create a resting period. Let that energy start to build back up. It's like a sprinter, who's going to be running 2 races or something like that. I'm not a runner, so I don't even know if this is real, but I'm not going to run the full mile. I'm going to stop halfway through, get a little rest, get a little drink of water, and then I'm going to sprint the other, half mile. And I need a period of rest, and that rest doesn't have to be for all that long. That's what the basing is for.
Yeah, no, I agree. And there's different criteria there as well. And we all look at things slightly differently. But one of the ways I explain that basing or rest period is, let's say you're looking at something that's coming up to its overhead supply, right? And you've seen it's been pounding its head against that over and over and over again. And it's come up to it right now, and it starts to sell off, but just a little bit and hesitates and stays there. You can learn from that, because what that is telling you, it's telling you that whatever selling pressure was at that level, which has held previously, while it's still held, the sellers didn't have the conviction to really push it away. Now, if there was a big candle left that area, okay, well, I'll wait for next time. I'll wait for some basing. But the basing tells you that there was hesitation. Whatever forces was stopping it from moving up didn't have enough chutzpah or momentum to push it down even further. So to me, that's kind of how I look at it.
Yep.
All of this is understanding the buyers and sellers in the marketplace, period, and what their actions and interests are. Yeah,
that's all it is. If they really had a commitment to push prices lower, they would have done it already.
I agree.
You know what I mean?
I agree. So what's your daily thing look like? I remember when you were on our side of the fence, like Trade Academy, you were traveling a lot of time, doing all kinds of events. What's your day look like now?
My day starts, my alarm goes off around 5:45, 6 o'clock. I'm in my studio, and I primarily focus up until about 1 or 2 o'clock in the afternoon. I primarily focus not just on my own trading, but also supporting the members at Traders Army. It's a membership-based community, and so we do a lot of live trading rooms throughout the week. So I'll host some of those. Chuck Fulkerson will host some of those. Justin Krebs will host some of those for us. So I'm managing positions, not just for me, but I'm also managing what we refer to as our trade worksheet, which is any updates I'm making to trades throughout the day. I'll type it in a worksheet, and then I'll push that out to all the members, and they can see in real time how it is that we're managing trades that we're in or that we're getting out of, creating new content. We do a lot of on-demand curriculum, so I'm doing a lot of video recording and audio recording for on-demand training. And that usually takes me up till about 2 o'clock. And then I focus on some music, because I also write for Discovery Channel. I write for 3 shows on Discovery Channel, so that's been taking up some good time. And I've been blessed to be able to write some music and get some what I call mailbox money for writing for television. So
nice.
It's a full day.
I'll try to identify you more when I get through the Discovery show. Sorry, guys, if you're hearing weird sirens. There's cops in front of my house. My dog's probably just about to start howling right now, so they were sparking their sirens. I mean, if I ruined you on that one.
What'd you do? What'd you do?
You hear it?
No.
I'm curious to see what's going on in front of my house right now. There's cops all over the place. Guys, if you want to know more about Corey, Traders Army, I've got on the screen here. It's corey.lane@tradersarmy.com. You can find out more information about what they do. I've had the privilege of working with Chuck Fulkerson and Justin Krebs and Corey Lane for many, many years. So great to have you back on the program. No, they're not at my door, guys. They're flying to the neighborhood, I guess. But anyway, Corey, thank you so much for coming to the program. I appreciate it. I'm hoping I can get you on more. Who knows? Maybe we can stream some live music sessions with you here.
Dude, let's do it. You just got to let me know when you can sneak me in, and I'm happy to come in. I've got all the time for you, Merlin.
Sales, awesome, man. Thank you so much for coming on, everybody. I hope you enjoyed Corey Lane. Again, if you want to see him, I'll put his email in there one more time for you, which is corey.lane@tradersarmy.com. If you want to know more information about what Corey does or what Traders Army does. All right, buddy. Thank you so much. Have a fantastic day. I will talk to you soon.
Thank you. Peace out, brother. Thanks, guys.
Guys, that was Corey Lane. I've known him for many, many years. Just an awesome guy. Hopefully you guys enjoyed his perspective on options, a little bit about the breakout type of trade. I am actually a big breakout trader as well. I love breakout trades for many of the same reasons that Corey was talking about, because there's this built-up inertia or momentum. It's this like this stress of buyers and sellers staring at each other going, it's not going up, it's not going down. Where's it going to go? Most likely the direction of the previous trend, which is why ascending triangles or descending triangles are so great for me. So if you guys like Corey Lane, do me a favor. I see I got 137 people watching live right now. Hit that like button. Give us some likes. Give him a little love out there. So it looks like he's doing a good thing for the show. I think he did a good thing. Ariel, I am with nobody right now. I am doing my own show. This is 100% me. I am... In the work world, I am unemployed. I just trade, and I do this show every single day. So that is what I'm doing right now. So there you go, Ariel. That's my stance. Here's Corey. Hey. Yeah. Well, what did somebody say about the FTC? I got to look through this real quick, because I saw someone say, run, it's the FTC. Trust me, they're not worried. That's great. It's not the FTC, guys. And by the way, I am not worried about the FTC in my world whatsoever. Okay. Let's see, tomorrow, we've got a busy day tomorrow. Today, there were some numbers that came out. Now, of course, you might remember I was talking about GDP numbers, and the GDP numbers were of concern. They were expecting to go to negative 4%, and I think we're actually going to do worse. I thought we were going to do worse than 4%. We came out at negative 4.8%. So all in all, an ugly day out there with regards to the economic calendar. Now, that said, we've already looked at some of the earnings stuff that's coming out for tomorrow. So let me show you what's happening. This is the earnings for today. We obviously had Facebook and Microsoft do rather well with the after hours, is why it's popping. If we look for tomorrow, you've got, again, more popcorn trades of the day. I love it. We have 4 popcorn trade of the day happening in a 2-day window of time. That's awesome. Today we had Google, we had Facebook, we had Tesla. Tomorrow, you've got Apple and you have Amazon reporting earnings. As exciting as $2 trillion companies reporting earnings, I'm more interested in the Apple side or the Amazon side of things. I love Amazon, and I think that they are going to do great. Of course, that said, they'll probably get crushed tomorrow. You also have Amgen, McDonald's, Philip Morris, which is also Altria, Amgen, Royal Dutch, Comcast, Visa. And then the one that's of interest obviously made the news today because the FDA is fast-tracking their coronavirus drug. Gilead Sciences will be reporting earnings tomorrow, and that should be an interesting one. Obviously, the numbers will not reflect anything to do with coronavirus, but that's what's happening on the earnings front for tomorrow. On the economic calendar side of things for Thursday, you don't have, today we did have some FOMC statements which were important. That helped drive these markets, right? Powell obviously saying they'll do whatever they can. Tomorrow, Canada has GDP. You've got some ECB press conferences. We have unemployment claims, which they're expecting to drop significantly to 3.5 million on initial jobless claims. I don't know if I believe that. Personal spending also is noteworthy for tomorrow, and then you have natural gas storage. So a lot of stuff happening for the U.S. markets tomorrow on the economic front, and really earnings. So tomorrow could be a wild one. You can probably expect right now for this to have a pretty big upside tomorrow because of the earnings announcements from Microsoft, Facebook, and Tesla in the after-hours session. All right, I think that will do it. I feel like I'm missing something. I feel like I have something to tell you guys, but for the life of me, I can't think about what it is right now. So I'll leave it with this. If you guys have questions, feedback, if you have questions for Corey as well, you can put those down below the YouTube videos. I'll always make sure we get to those. Underneath the YouTube video is the best way to do it. Again, click the subscribe button if you're brand new to this show and you are a first-time listener. Also, click that like button. Let's give a little more likes out there, and hopefully we'll start ranking even higher on search engines for Google with regards to this show. That will do it for today, everybody. Again, thank you so much for joining us. Hope you enjoyed Corey. Tomorrow, big change. Actually, Sam Evans was supposed to be the guest tomorrow. He had something came up. He's going to be on Friday now, so he'll be drinking with me on Friday. That's all we got to worry about. And then, so tomorrow I'll be doing an all-questions show. So if you have questions, now's the time to send them in. Go down below the YouTube videos, type it in. Until then, happy trading, everybody. I will see you tomorrow. Take care.